I'm Epstein with your weekly metals market edition for this Sunday evening, and this is January 12th, 2025. So we're looking at gold, get another bid right off the bat, the same with silver. Not the case in the platinum and the copper right now. One of the things the market's looking at, and I've been telling you, is the differential between London and what the markets in New York are doing in the metal markets, and that's a problem for the market. It appears that the market is fearful of Trump tariffs. We're a week away from the press report saying that there's going to be 100 new bills that President Trump signs almost instantly. I don't know what the word almost instantly means. We'll find out. But keep in the back of your mind, the markets absorb the worst of those bills, and now moderation kicks in. Tonight, I spent a lot of time writing what I call reality check for my full research people that I'll put out after 7 p.m. Central Time. And that gives them an idea as to where I think we were, where we're at now, as the Trump inauguration takes place a week from tomorrow, and what those bills might do and where the policies are and where the market is. As you know, on Friday, we had a powerful jobs report. I mean, if anyone thinks the U.S. jobs market is weak, wrong. If they think the jolt shows that American businesses aren't hiring, wrong. If they look at unemployment claims, they're going up, wrong. So all that is just adding fuel to the fire. You've had a correction in stocks going on. You have golds running on the fear of what this all may mean, inflation, and you've got fears going on in the energy market because the Biden administration on Friday hit two of the large oil companies in Russia with more sanctions and 180 of their ghost ships. Now that means that those named ships cannot get insurance and anything else from any company that deals in the West with us and uses the SWIFT system without retaliation by the U.S. government. So that becomes instantly a bullish idea on those markets. We know that we're dealing with the fire that is going on in California. I hear estimates of 50 billion, but I think it's over 100 billion. When I look at all those homes that are burning, just add up the inflated prices of those homes and wonder where you're at. It's one after the other, and this fire is not contained. I mean, they're getting it gradually contained, but then the winds come back. And tonight there's a report that in a day or so, the Santa Ana winds are going to be, again, a real problem for everything. In the Midwest and parts of the South, parts of the East Coast, cold. Very cold weather coming back, sub-zero weather this week. We in Chicago today had a break. Everybody was out like it was spring because we hit 33 degrees. You think I'm laughing and being funny. I'm not. And I went out there and I didn't have to wear my big heavy coat, all right? I was thrilled because we've been in the 20s and in the teens and with winds. So that drops off. It's like a spring day. All right. When we look at the monthly chart of gold, we're only at the 12th. We're 1/3 into the month. You're up 3%. The market is now, the question is, on a monthly basis, you're challenging the highest close of 27.4930. We know there's intraday highs that have been higher than that. When you take it on a weekly basis, it matches up with that. Now we come over here and you can see that you're higher than that when you come here, which I'd expect. So now what is the pattern? It's bullish. Higher lows, higher highs. The support I'd look for would be 26.69 roughly, the 18-week average of closes, the number I call the line in the sand, with resistance right up here at 27.63.5, the upper Bollinger Band. The market doesn't have to stop at the Bollinger Band, but what it acts as is a logical spot for the professional traders to probably take some money off the table, as the algorithm is designed to keep the market trading 95% of the time with it. So yes, you can run it. That's to be expected in a bull market. But there's areas you take positions off and you add them back. And you take them off and you add them back until that all stops, all right? And where a lot of it comes in is with the momentum of the market. So when the momentum locks in, what I call embedded right through here, that's where you're taking off, you're adding, you're taking off, you're adding. And when the momentum's lost, you're not doing that anymore. Now the market has just come alive. With this past week, the week ending the 10th, you reestablish the uptrend. So I do believe that you're going to see buyers coming in on the break. The gold-silver ratio on a weekly basis still favors the gold market. It is trading over the 18-week average, which keeps the bias up. My simple definition, when the market's over that, you have an upside bias. When it's under the 18-week average, you have a downside bias. It's a filter for other parts of work you do. When you look at silver, you can see, unlike gold, which we're talking how high it can go, you're up at a resistance point in the silver at the 18-week average of closes. Copper's very similar. You've just stepped out of your downtrend there. Platinum market's got three moving averages that it's fighting with. The green is the 100, the red is the 18-week, and the gray is the 200-week moving average of closes. You're not trending. You've come out of a market that was oversold, and you're not in an area that's possibly going to go into a pause. But the headwind of the US dollar is there, as right now the dollar's setting new highs for this whole move. And it is up tonight 38 points as we take a look on the weekly chart, 109.52. I've talked of that 109.80, 110 zone as your resistance area. I can still see that as being what we call a price count to get up there. We talk about that and a heck of a lot more in our Linn research. When we give this to our clients, what they get to see is if they want the price count data, which is super important. Then we're talking all these different markets, technical, option trading, cash markets, what are they doing, futures, seasonal plays, all of that in there, and they start putting this together with everything else we offer, and you get a game plan. You get some understanding of not only the technicals, the fundamentals, what's working the market, where are you, and you can even get through our charting software, QT, the oral updates throughout the day that our market analysts are giving, and they're interesting as can be. So how do you get this and our QT mobile app to try out with it and other things? Just simply go to iraepstein.com, free offers, or move your cursor up to the top here and give that a click. It'll take you there. Give it a try. Maybe you'll get an idea or two that might help you with your 2025 trading. I'm Ira. Have a good evening.